All right, good evening, everybody, and good evening, Choo. All right, let me test the sound first and see whether you are okay. Are you able to hear me, Choo? Okay, I can't hear your voice. Is your mic on mute? No?
Okay. Can you hear me now?
Yeah, now can. All right.
Okay.
Yeah, now I can hear. Okay, good evening, everybody, and welcome to tonight's session brought to you by Bursa Malaysia. Today, we have a topic on leveraging investment choices. So we're not just going to talk about investing in stocks. We're going to also take a look at other investments that you can actually invest right here at right here in Malaysia itself, right? We're going to take a look at some of the products that's available, which is outside the stock investing scope. All right, so we do have some exciting stuff. It's gonna brought to you by Choo later on. She's gonna basically share these few ETFs which are still new in the market, and it's really a fresh new product. It's not like the old conventional ETF, and that's one of the way for you to also expose in other markets. All right, so before we start, if you can hear us well and see us well, can you just say yes in the comment section so that we know that you are able to hear us and see us? And maybe Choo, you can say something so that they can also hear you.
Yep. Hi, everyone.
All right. Okay. So we'll just wait for the answer for a while. Yeah.
Okay.
And for guys, yeah, for those who join us, thank you so much for joining us on a Saturday evening. I know it's a Saturday evening. We probably have your own plans, but thank you so much for joining us, right? And to hear what Bursa has to offer you to invest not just in stocks but some other products as well. And some of you might already be aware of the products that's being offered, and some of you may not. We're going to clear some things up today, especially when it comes to ETFs. All right. So I'm just going to make a short introduction. Of course, I'm going to go through the disclaimer and so on, so that we can start this presentation. And the presentation will be mostly done by Ms. Chong Choo. All right. Okay. So let me just present this. So tonight's topic, for those who join us, is called leveraging your investment and broaden your investment choices. Okay, so we're going to be presented by Ms. Chong Choo. Now, for those who are still just join us, you can find more information to learn about investing, and other, not just investing. There are a lot of other stuff you can actually learn from the Bursa Academy. All right, so Bursa Malaysia has just created a microsite, a site called Bursa Academy in itself, for you to get more information and to learn to be a well-informed investor. So it's like a one-stop e-learning platform to continuous and also holistic learning journey in investment. All right, so go to the website. If you haven't registered, please do register with bursamarketplace.com, but you can check out www.bursaacademy.bursamarketplace.com. All right, so just go to bursaacademy.bursamarketplace.com. All right. Now, let me just introduce our main speaker for tonight. Ms. Chong Choo is currently the Director of Innovation Lab and Alternative Investment of Affin, Hwang Asset Management Berhad. Right, so she is basically the person who is responsible for developing strategies and products for the exchange-traded funds business with Affin Hwang Asset Management. All right, so she has been in the bank. She has vast experience. And I think up to now she's one of the individual who really tried to promote ETFs in the Malaysia, try to at least create more awareness on the ETF market other than Bursa Malaysia, right? So she's one of the, she's one, you can see her everywhere whenever we have an ETF topic, you will see Miss Chong Choo over there, all right? Of course, we'll be taking your questions. So if you have any questions during Miss Chong's presentation or Lee Choo's presentation, please do ask those questions. I'll bring those questions up so that, whether it's directed to Lee Choo or myself, you can just ask those questions. All right. One more thing before we start, whatever that's being shared here today and discussed here today is for educational purposes only, right? It's not intended as any investment advice. So if you want to look for any investment advice, please do consult your professional and licensed investment advisor. All right, so what I'm going to do, I'm just going to give this time to Lee Choo, and she'll be presenting from her side. I'm just going to stop sharing my screen and bring Lee Choo's slide on. So guys, if you have any questions, you can just type them down, right? I'll be listening, I'll be looking at your questions, and then I will bring those questions up once she has finished her presentation. All right, so Lee Choo, over to you.
Okay, thanks, Benny. Okay, I believe all of you can see my slides. A very good evening to all of you. Thank you, Benny and EquitiesTracker, as well as Bursa, for inviting me to share again on ETFs. So today, as you know, if you have attended some of my talks physically, you will know that actually I can talk for hours when it comes to ETFs, because ETF essentially, it is actually a very wide topic, and since it's very new, many investors need to understand everything, the A to Z of ETFs. So today, given that I only have about 1 hour or so, I'll try as much as I can to cover them and give you a very quick snapshot of what's happening or what's available on the ETF in the ETF market in Malaysia on Bursa. Okay. Now, first of all, there are four topics broadly which I want to cover today. So it would address some of these questions. For example, how you can actually invest in foreign markets locally, so without having to open a brokerage account outside of Malaysia, you can actually invest into foreign markets, right? Secondly, find out how you can actually gain leverage on your capital. So for those of you who are a little bit more a risk taker, you can actually consider products like this that can help you gain leverage on your capital. And then what to do when markets fall, and last but not least, how to catch sectors on momentum. So before we go through the presentation, I think just as with all investments, there are a few questions that I think you need to ask yourself so that you can uncover your your preference, your risk appetite, etc. So first of all, when we talk about investing into foreign markets, I think very importantly we need to ask ourselves, right, how much money are you willing to allocate for foreign markets, right? So let's say you have an investable assets of 100,000, right? How many percent of this 100,000 do you want to invest in companies or stocks outside of Malaysia? So let's say if you think that you are not that familiar with the foreign markets or the global markets, you prefer to invest into Malaysian companies because you understand them, you can see them, you can visit their shop, etc. Then your percentage or the money dollar that you're going to invest into the foreign markets could be just maybe 10-20%. That's just 10,000 or 20,000 ringgit, right? And with that amount, then you need to ask yourself, how much diversification do you want? Do you just want to invest into one single share, Tesla, and that's all? Or do you want to have a diversified portfolio of shares that is outside of Malaysia, right? So secondly, when we talk about leveraging on your capital, of course, the first question to ask is, do you actually currently have a lending facility in place? If not, how can you quickly gain access to leverage product without having to get a share margin financing from the banks, right? And what are the fees that you are paying for your lending facility? Okay. When we talk about markets falling, okay, it's which is actually happening right now, right? In the past 1 week or so, the Bursa Malaysia has been falling. So the question is, do you get nervous? Would you like to invest more, or do you want to cut loss, or you wait for it to rebound? What exactly is your strategy, or do you want to try and make some money when markets are falling? Okay. And when we talk about catching sectors on momentum, then some of the questions that you may want to ask yourself would be, what exactly is your investment style? I believe a lot of you who follow EquitiesTracker are value investors. So other than value investing, what other strategies do you want to get on? Could it be momentum? Could it be dividend? And any sort of strategy. And what is the best strategy to catch those stocks with momentum? Assuming if you have really been a value investor, you probably don't know that much about finding stocks with momentum. So some of these products that is available on Bursa Malaysia can help you to complement your value investing portfolio. Okay. Since we're on the topic of ETF, the products that I'm going to be sharing with you today are all exchange traded funds. So which is why it's important then to understand what exactly are exchange traded funds. Okay. Those of you who have followed some of my presentation, you would have seen these slides like many, many times. Okay. This is for those who are new, who have not seen any of our presentation. It's a very quick explanation on what ETFs are. Some of you may have heard of ETFs, some of you may have not, but I'm sure all of you know that, have heard of share investing. And the second thing is unit trust, right? So ETF is actually a hybrid product that cross between these two products. Why? Because ETF essentially is a unit trust fund, but the only difference is it is being listed on Bursa Malaysia. So instead of going to a agent or a salesperson in a bank to invest into unit trust, you can actually use the trading account that you have to trade shares and purchase the ETFs on Bursa Malaysia. Okay, so some of the benefits are very similar to shares, because the fact that you can actually it's listed on the share market, you can buy it through your current CDS account. So ETFs are usually index trackers. Okay, so those of you who have been investing into unit trust funds, you would know that unit trust funds are actually designed to outperform a particular benchmark. So most of the time, when a salesperson comes to you to sell a fund to you, they will say that, hey, look, my fund manager has been doing a great job, and they have been outperforming the benchmark, which is generally the FBM KLCI. And that's purely because a lot of investors don't know what stocks to pick, and therefore they don't mind paying a fund manager to help them to invest in the stock market. Okay. Now ETFs, on the other side, even though they are a fund, they are not designed to outperform a benchmark. So index trackers means they will just track a particular index. So if you think of it another way, investing into ETFs essentially is equivalent or similar to investing into the index. Today, if you want to invest into the index, you can actually do so by looking at all the stocks that they have, right, in the particular index, and you can just buy them and replicate it yourself. But if you were to replicate them yourselves, it could be very, very costly to invest into in accordance to the weightage of the index. So which is why ETFs are a great way for you to gain access to indices. Now, this slide is very, very wordy. Let me try and sum it up to you. So essentially, the difference between unit trust versus ETF is the way you purchase it. One of the difference is the how you buy, sell ETFs and versus how you buy, sell unit trust. So buying and selling unit trust, you can either go through online platforms like Fund Supermart or ePhillip or Phillip Mutual for you to invest into unit trust funds, or meet a person, whether in the bank or an agent. And it means that you have to pay a sales charge because they provide services to you, and therefore some of the sales charges could go up to as high as 6% depending on the funds. Now, when you buy and sell ETFs on Bursa Malaysia, you will buy and sell it through your local broker. So today, if you already have, a CDS account, a trading account with any broker in Malaysia, be it Maybank, CGS, CIMB, or Rakuten, etc., you can already invest into ETF. So the way you buy and sell is exactly like buying shares. So which means that your settlement is on T+2, and the fees that you pay would be brokerage fee, clearing fee, and stamp duty. So the fees are similar to share trading fees. So that would also means that if you compare those fees versus the 6% sales charge that you have to pay, it's a lot lower. But then again, it really depends on the amount that you're investing. Because today, if you were to buy just one lot of shares, right, or one lot of an ETF, you could end up incurring more than 6%. Okay, if your investment amount is really, really low. So I wouldn't say, which is more expensive, because it really depends on the amount that you're investing. Okay, now, because ETF is also a unit trust fund, therefore, the issuers or the fund manager will actually charge you a management fee for managing the investments for you. So typically in a unit trust fund, the management fees are generally higher as compared to ETF. They range from 1 to 1.8% depending on the fund type. And for ETFs, they are typically below 1%. Okay, so dividends, of course, both of this unit trust and ETFs, not all ETFs and not all unit trust gives out dividend or income distribution, because at the end of the day, it depends on what companies these unit trust funds or ETFs actually hold, right? So one of the good thing about unit trust is that dividends can usually be reinvested. Okay, so let's say, if they declare any dividend, you don't get it in terms of cash payment, you get it as a form of reinvestment of units. So additional units will be given to you. Whereas because ETF is listed on Bursa, so therefore, you can't really opt to reinvest the units. You will always be paid cash, and then this cash that you have, you will then, if you want to, you can then buy more of the ETF units that you want to invest in. Now, let me very, very quickly highlight to you the benefits of investing into ETFs. So first of all, it's low cost. Low cost as compared to unit trust funds. The management fee is lower. Brokerage fee generally also lower than the sales charge that you pay. And on a portfolio basis, because it is a passive strategy, because the ETF essentially tracks the underlying of these indices, therefore, there won't be a lot of buying and selling of shares that's happening as compared to unit trust funds, where the fund manager actively manages your portfolio. So on a daily basis, there could be a lot of buy and sell transaction that happens at the fund, and as a result of it, the fund will have to incur higher transaction costs because the fund will have to pay brokerage fee as well. Okay. Second of all, access. So the good thing about investing into ETF is that it actually gives you access to asset classes like gold, fixed income, or bonds. Some can, in the US, you can have access to volatility as well, and currencies. And at the same time, for an ETF, you can also have an inverse exposure as an investment objective. What it means is later on, I will share in my slides what inverse ETF can do for you. So which means that you can actually short the market without having to, actually short it, but you can buy an inverse ETF to get the short exposure. Okay. Third, transparency. If you don't know, ETFs are actually very transparent on a daily basis. ETF issuers like ourselves have to disclose the entire portfolio holdings to investors in the form of Bursa announcement. So today, if you go into any ETFs in Malaysia, and if you click on the announcement that the fund manager made, on a daily basis, we inform investors what are the companies or what are the shares we hold for this ETF. So if you compare that with unit trust fund, no way the fund manager will let you know their secret recipe, right? They won't tell you what shares they invest in. You probably get a feel of the top 10 holdings that they have. but ETFs are perfectly transparent. Okay, liquidity, because it can be bought and sold at any time during the trading hours with a known price. That is actually a very good benefit that I personally like, because today if I buy or invest into a unit trust fund, when I want to make a redemption, because unit trust works on a forward pricing method, which means that today if you put in a redemption, you will only know the price at the end of the day. Okay, so the fund manager will have to calculate at the end of the day what is the NAV of the fund, and that will be your redemption price. Whereas for ETFs, because they are on the exchange, if you like the price, you can just queue at the or take that particular price and sell your ETF units. Okay. Now, I believe this question will pop up later, Benny, right? Because every time when we do talks on ETFs, people will ask about liquidity. You know, when you look at the trading volume of ETFs in Malaysia, you will see that, you know, wow, it's so illiquid. That's a lot of a comment that I hear from investors. But many of us, or many of the investors out there, don't really know that ETFs actually appoint market makers to provide liquidity. So who are these market makers? Market makers are the investment banks or a broker that we appoint as the ETF issuer. And all they do is to provide liquidity to you, which means at all times, they will put up a bid and an ask price, which is around the current fair value of the ETF to investors. So which means that this market maker act as a buyer and seller to whoever who wants to buy and sell the ETF units. So you don't have to worry about liquidity, because if you don't believe me, right, you can just go on to your trading platform on Monday, and you can see that at all times actually there would be a bid and an ask price, and usually they are quoted in larger quantity. Okay. Now, so let me just give you a snapshot of the screen of all the ETFs in Malaysia. Now, if you take a look at it, there is always a bid and ask, right? Sometimes some people get worried because, you know, hey, I only see one bid and one ask. And because nobody else is queuing, they are worried that they can't get in or out. So rest assured that these one bid and one ask are actually quoted by the market makers. And these market makers are there to show you that, you know, at the end of the day, if you want to buy, just take the ask price, and if you want to sell, just take the bid price that the market maker quote, and the transaction will be done. Okay, so if you take a look at this screen, like I said, you see that a lot of it has got large quantity, like the first line, the ABF MY1, the ask quantity is at 100,000 shares. So this is usually the market makers quoting this 100,000. Okay, so you don't have to worry actually. And then on the other side, on the bid side, you only see 4,000. Most likely the market maker's price is hidden below this 1,246, and that's why you don't see it. So you will see that retailers will come in to narrow the spread. Okay, so if you take a look at the gold ETF counter, for instance, you will see that, you know, 251 is actually the price that the market maker is queuing for ask, and the sell is probably hidden at 24 plus, but there are retailers who will come in to narrow the spread to 600. Okay, so don't worry too much about liquidity. I would say market makers are there readily to buy and sell. Now, I talk a lot about the current price or the fair value of the ETF. So today we know that if we buy unit trust funds, right, there is always an NAV that will be calculated by the fund manager and published to you. Same goes to ETF. On an end of day basis, we also publish our daily NAV to you, right? So when we publish this NAV to you, bear in mind that during the intraday, these prices also fluctuate, unless of course, you know, the markets are not open. But if the markets are open, the current value will fluctuate, and it will not be the same as the end of yesterday's end of day's NAV. Okay, so if you go to Bursa Marketplace, you can find from this page that I've given you the link here below, and you can refer to this column called IOPV. So IOPV stands for indicative optimized portfolio value. In short, it is an intraday NAV. If I'm not wrong, it is updated every 15 minutes. So it tells you where the current fair value of the ETF is at. So based on this information that you have, you can then go to your share trading platform to see if the market makers are actually quoting the price at around this fair value. So if you want to buy, you don't buy too far away from this fair value. Okay, so this fair value is very important because it helps you understand or know what exactly the current fair value of the ETF is, and it's as a guide so that you don't buy at a premium. Okay. Now, so let me give you, some tips on what to look out for when choosing an ETF. Now, the general ones would be, your total expense ratio, your tracking error or tracking difference. Tracking error simply measures how closely the ETF performance actually tracks the index that they are tracking. And of course, TER is the total expense ratio for the fund. Some of you will say that, the TER of Malaysian ETFs are at around 1%, or sometimes a bit lower than 1%. It could be at about 0.5 to 1%. And those of you who understand the ETF market and have invested ETF in the foreign markets, especially the US, you will tell me this thing: the TER is simply too expensive, right? But I will tell you that you have not actually evaluated the entire proposition of the ETF, because other than the TER that you see, which is expensive, when you invest into say a US listed ETF, you have to bear in mind that you actually pay a cost, or when you actually convert your ringgit to US dollar. If you actually look at the bid and ask of the currency exchange that you pay, it is easily more than 2%. Okay, so if you were to add that into the cost that you pay as a whole, then the TER in Malaysia at 1% may not seem that huge. Okay, the good thing about when you convert your money into US dollar, because you convert it at an X price, and the fact that you don't really see that you pay this X amount, you would think that this cost don't exist. But if you actually think about all these costs and on the withholding tax that you pay, etc., then you will start to see the local ETF in a slightly different manner, right? Because it gives you, what I personally like is the convenience, because you don't have to actually open an account offshore to invest. And if you were to use a local broker in Malaysia, you will also have to pay a double brokerage, right? You have to pay your local broker, you have to pay the foreign broker when you transact foreign ETFs. Okay, so today when you want to choose an ETF, if you ask me, I will do it very simply. First of all, I will look at the index strategy, whether it meets my objective or not. Okay, if I want to look for something that gives me exposure to China, does this particular index gives me that exposure? If yes, then one checkbox is ticked. Secondly, if the TER to me, anything below 1%, I'm fine. That's personally for me, because other than looking at the index strategy, you need to also look at what are the available options in Malaysia as well as outside of Malaysia. Of course, in Malaysia, probably there are not that many ETFs that has a very different strategy, because we don't have that many to begin with. Okay, now tracking error, as long as the ETF actually tracks the particular index quite well, I personally don't look at the difference that much. Okay, so if it's way above or way below, that's too much, then of course there'll be a red flag for me. Otherwise, I would just take it with a pinch of salt, take a look at it. If it meets the objective, again, check another box. For me, convenience is very, very important. I don't like to convert my currency to US dollar, and then hold it and then take those currency risks. And then when I convert back my, if assuming I sell my ETF in the US and then I convert it back to ringgit, I don't even know whether I'll get whacked on the currency front. Okay. Now, so where can you compare ETFs in Malaysia? Today, if you go to this website, Morningstar, they actually list down all the ETFs that are available in Malaysia. You can also compare unit trust fund in this particular portal as well. And when you look at this page, it will list down all the ETFs and the performance of these ETFs to you, so that you can make your judgment into whether or not this particular ETF return is good, what it invests in, the style, etc. So if you click on the name, you can then go into the more details of the ETF. Now, of course, we talk a lot about the benefits, about the good things of investing into ETFs. ETFs also come with risk, of course. So one of the most important risks is that because ETF essentially invest into a portfolio of shares, you therefore take market risk. Okay, market risk simply means whether you invest into the share market directly, or you invest into unit trust or ETF, you have to take on the market risk. Any factors that could affect the performance of the underlying shares will impact your shares investments, your unit trust, and your ETFs. Okay. Now, the other thing to highlight here is that the units of this ETF may trade other than the NAV. So today, as much as we talk about the market makers being there to provide you a fair price to buy and sell, there could be times where, say, the markets are really, really illiquid, and then that may actually drive the market makers to quote the price outside of this NAV. Okay, suspension of creation, redemption of units. These are very, very rare, but these are incidents that we may have to highlight, where market makers may be unable to create or redeem units, so that causes this suspension, right? Tracking error risk, of course, there's no perfect correlation between the NAV and the benchmark. As much as the fund manager tries their very best to ensure that they track the benchmark closely, there is that risk that we may not get there. But of course, you can look at the historical performance as a gauge, but there's no guarantee of future performance, of course. Okay, liquidity risk. Like I said, as much as market makers are appointed, there could be times they may not be in the market. Okay, so all these risks, these are just the high level risks that or the more common risks that I want to highlight to you. But as to be an informed investor, it is best that you go to the website of each of the ETFs that you are interested to invest in. Do dig up the prospectus and read it thoroughly to understand the risk factors that are involved in investing into the ETFs. Okay, so now let's talk about the types of ETFs that are available on Bursa Malaysia. Here are some of it that I've actually grouped them according to their underlying. We actually today have 4 ETFs that is domestic market, so which means that it invests into equities in Malaysia. So you have FTSE Bursa Malaysia KLCI ETF. So if you like exposure to the KLCI, you can invest into this ETF. Those of you who prefer Sharia compliant investments, you can consider the MY ETF Dow Jones Islamic Market Malaysia Titan 25 or the MSCI Malaysia Islamic Dividend. Okay, so the main difference between these two would be the Dow Jones Islamic Market Titan 25. That is like your KLCI equivalent, but excluding the non-Sharia accountants. So Genting is excluded, etc. and things like that. So 25 companies. And then the third one, the Malaysia Islamic Dividend, focuses on dividend-paying Malaysian stocks. Okay. And the last one, Trade Plus DWA Malaysia Momentum Tracker, is listed by Affin Hwang Asset Management. And this particular ETF gives you exposure to momentum strategy. This is the one that I will cover later on in my slides. There is also a bond ETF, the ABF Malaysia Bond Index Fund. So this particular ETF gives you exposure to MGS. Okay, so if you want to invest into MGS, you can actually consider this particular ETF. We have a gold ETF, the Trade Plus Sharia Gold Tracker, and this is Sharia compliant. On the 15th of July, we listed the Trade Plus MSCI Asia ex Japan REITs tracker as well. So this is a basket of REITs that are listed in the Asia ex Japan region. So those of you who like, dividends, to receive dividends from REITs, you can actually consider this particular ETF. Now, there is also a list of foreign equities ETF. So you have ASEAN, we have 2 China ETF, one by Principal Asset Management, Principal FTSE China 50 ETF, and one listed by Affin Hwang, which is the Trade Plus S&P New China Tracker. And also the Southeast Asia Islamic Dividend. And those of you who want US market ETF, like the S&P 500, we don't have an S&P 500 ETF, but this Dow Jones Titans 50 is actually quite close to the S&P 500. However, this is traded on Bursa Malaysia in US dollar. So which means your broker, you will have to settle this the purchase of this particular ETF in US dollar. Okay. Now, just to give you, a flavor of why you need to actually invest into the foreign markets. Okay. Now, Bursa has been very, very hot ever since the bear market in March, right? We are actually now the top performing, but in the past we have actually been the laggard, right? So that's why I took up the performance of the Trade Plus S&P New China Tracker versus the FBM KLCI. The S&P New China Tracker is in blue, FBM KLCI is in red at the bottom. Okay, so if you would have invested into the Malaysian markets, it could, whether it's unit trust or you invest in yourself, performance has not been that great, right? Over the past few years. But if you actually take a look at the New China Tracker, because it invests into the foreign markets, which is offshore, you don't need to open an account in the US or in Hong Kong to get access to companies like Alibaba, like Pinduoduo, like Meituan, what else? JD, Baidu, etc. Right? So by buying into the Trade Plus S&P New China Tracker, you get all these big companies. There are 70 Chinese companies in there when you invest into this particular ETF. So, those of you who are interested, just head on to our website and you'll be able to find a lot more information on it. Now, Benny, how should we do this? Should I take a break now, answer some questions before we go into the next session?
Yeah, maybe you also want to take a break first. You've been going for half an hour. So yeah, I think maybe we'll take some questions first before we go on. I think there are some questions coming in. And of course, I think some of your colleagues have already answered some as well, but maybe I'll just highlight some of the questions so that you can answer them. All right.
Okay.
So yeah, so we have actually a question from Kati Rasen Kupusami here. He asks, can gold ETF be traded using a normal account? Because he tried using Rakuten, but was being rejected.
Okay, this is a very, very common question that we take. The reason for this is because the gold ETF is Sharia compliant. So those of you who are a Muslim investor, you would know that gold is a ribawi item, right? Ribawi item means you have to exchange it on the spot. So the Sharia advisor of of SC actually thinks that you need to have cash upfront when you invest into the gold ETF, right? Because you are essentially buying the gold. So as a result of it, only cash upfront account can purchase this particular ETF seamlessly. Okay. So what happens is that some brokers actually block or suspend the counter from trading for this reason. So what you need to do is actually you need to give them a call to call them up in order for you to proceed to buy. So what they have to do as a broker is that they need to check to ensure that your account has got the sufficient cash before they allow you to invest. I can give you another solution. There are other brokers who are a bit more friendlier in the sense that you don't have to call them and buy. So you can try out M Plus account. M Plus has Malacca Securities has a cash upfront account whereby you don't you don't need to give them a call. You can straight away buy and sell the gold ETF. So I know some brokers can be a bit more difficult to trade when it comes to that. Yeah.
All right. So call your brokers if you have any problems trading the gold ETFs, because you should be able to trade normally.
Yeah.
If you have, of course, cash in your account, then there should not be any problems at all. Okay, next one. We have a question from, maybe I'll bring that question later because he's asking about inverse ETF and futures. So we haven't presented that one yet, so I'll bring that later on.
Yeah.
There's a question here from YouTube. We have a question from CH Ang. How do you know if the ETF is properly constructed?
Okay. I think I guess your question probably mean how to know whether the particular ETF tracks the benchmark closely or not. Because construction of the ETF depends on the index, right? Just like if you invest into the S&P 500 ETF, you want exposure, you want the performance of S&P 500. That's why you buy into S&P 500 index. So it's quite simple if you ask me. You just need to pull out the performance of the ETF versus the benchmark that they track in order to see whether they are tracking the index closely. So I believe these are also disclosed in their annual report. So you need to do a bit of homework, right? You need to go and check the annual report to see, to look at the performance of the ETF, the chart, to understand whether or not they are actually tracking the ETF, the index closely.
Right. Okay. Next question. There's a question from Sri Kumar. Any currency risk in dollar-denominated ETFs or not?
Definitely, unless the issuer or the fund manager actually performs FX hedging. But so far, all of the ETFs in Malaysia they are not hedged. Which means that you take on the exposure of currency. So let me give you an example. Like gold ETF, right? Gold price is quoted in US dollar. Okay, so even though we list it in ringgit, as and when the US dollar actually strengthens or weakens, it will impact the performance of the gold ETF. So the short answer is yes, there will be currency impact or currency risk.
All right. Okay, you have a question from Edmund Che asking, last Friday gold ETF was an example of price deviation from NAV. What will happen coming Monday? Will it be corrected by the market makers? Gold prices has been crazy in the past 1 week also.
Yeah, it has been. But I need to take a look at the NAV. I'm not too sure. I never checked last Friday's NAV, so I will probably need to take a look at it. My suspicion is sometimes the price deviation may not be caused by the market makers. So as you know, right, market makers will quote the bid and ask. Okay, but sometimes maybe a few minutes or 5-10 minutes before the market open or before the market close, market makers may be off market making. So which means that when they are out of the market making activity, what happens is that that this then becomes a supply and demand issue, right? Because not many investors actually know that there is a website on Bursa that you can check whether this particular ETF the fair value is at what price. So some people will go in, retail investors especially, without knowing that there's a fair value for you to refer. They will just jump in and take on any offer to buy. So that could cause the price deviation. So what happens on Monday would likely be if the gold price has fallen, then the market maker will come back in to then quote at the fair value at that particular point.
All right. Okay, one more last question before we continue your presentation, Alichu.
Yeah.
There's a question from Fahmi Hamid asking what happened to my ETF Thomson Reuters Asia Pacific ex Japan Islamic Agri.
Agree. Okay. This
Yeah.
particular ETF, I think it was published in the papers that they are actually going to delist this particular ETF. So essentially, what happens when the issuer wants to delist the ETF would be they will have to call for unit holders meeting. If everybody agrees to delisting this particular ETF, the fund manager will proceed to wind down. So when they wind down, they will sell all the shares that they own, and then from whatever proceeds that they raise, it will then be distributed back to investors holding the particular ETF.
Right. Yeah, I've got that particular set of news. I'm going to share that link, so that you can actually look at the news, because they are one of the reasons why they actually want to terminate that fund was because the size was too small. So I'm going to provide a link so that you can take a look at it. All right. So, Lichu, you ready to do the rest of the presentation? We still got a bit more to cover. Okay. So, yeah, we can go on. And guys, if you have any, if you have any questions, you can just type it in as what you have just done. When Lichu is presenting, and if you have any questions regarding a slides or a presentation, you can also ask us questions. All right. Sorry, Lichu, you can go on.
Okay, just to address one concern where some investors may have would be the fund size of the particular ETFs, right? So because ETF market is still very, very new in the Malaysian market, so some of the fund sizes are quite small. And as a result of it, it could cause your expense ratio to shoot up, and some of you may be worried that, the fund will be delisted because the size is too small, right? So you don't have to, okay, I wouldn't say don't have to worry, but what you need to do is you need to then understand or at least have a comfort from the issuer that we are not going to be delisting it, because, for example, all the ETFs that Affin Hwang has listed, that has the Trade Plus branding, we are committed to be in there for the long term. So we know that we are in there to grow the AUM over time. So you don't have to worry about us delisting the fund as a result of small fund size lah. Okay, now okay, let's talk about leveraging and going short. Of course, when we say going short or shorting the market in Malaysia is like a taboo word, right? We can't really short according to our CMSA, our act. So it will be against the law if we were to short. Okay, but however, what we are offering here is similar to going short, but you're not shorting it directly. Okay. Now, after taking a look at the list of ETFs that are available on Bursa, that are plain vanilla, I would call them, because there is no leverage and inverse factor in there. This particular section, I'm going to talk about the list of leverage and inverse ETFs that are available on Bursa and how you can actually gain access to these particular ETFs. So currently, there are 3 pairs of the leverage and inverse ETF. So all of them come in the form of leverage and inverse, and they track different indices. So we have the Trade Plus NYSE Fan Class Daily Leverage Tracker, so it's 2 times leverage. We have the Daily Inverse Tracker for FANG. We have HSCI. HSCI is Hang Seng China Enterprise Index. Again, leverage and the inverse variant. And we also, Kenanga also listed the KLCI Daily 2 times leverage and also the inverse ETF. Okay. So for example, last week, the Bursa Malaysia or the KLCI has dropped quite a fair bit, right? So you could have invested into the KLCI inverse ETF to get returns, a positive return when the index goes down. Okay, let me explain how leverage and inverse ETFs work. Of course, for the leverage ETF, the objective is very clear, is to deliver twice the daily performance of the particular index. So say, for example, today, if this index that we are tracking gain is up 1%, the 2 times leverage will go up to close to 2%. Whereas if you have invested into the inverse ETF, because it gives you the inverse performance of the index, if the index drops 1%, the inverse ETF will make a return of 1%. Okay, so it's always the inverse return. Now, bear in mind that just now I mentioned that the objective is to give you the daily return. Okay, so which means that the fund manager actually does daily rebalancing when it comes to investing into ETF, right? Into the leverage and inverse ETF. So the daily rebalancing, essentially what it means is like, if you think about it, it's like your savings account, where if the bank says I'm paying you 3% per annum, but on a daily rest, okay, which means that on a daily basis, the bank will give you that 3%, and then you compound your returns from that day. Okay, so this daily rebalancing will actually end up having a compounding effect, which I will later on illustrate, because this can be a bit more complicated. Okay. Now, so what essentially it means is that if you have a 3% per annum interest paying on a daily rest bank account, over a year, your return will be more than 3% and not just 3%. Okay, so how does the fund manager gives you the 2 times leverage and inverse performance? It's very simple. We invest into the index futures. Okay, so we invest into the futures contract to give you that 2 times leverage as well as the inverse exposure. And on a daily basis, the fund manager will have to look at the portfolio and then rebalance them to make sure that they are 2 times and 1 time inverse. So which means that we will never go above these 2 times and negative 1 time for inverse. Okay, now let me give you an illustration on how the performance will work. So assuming this is a best case scenario for the leverage ETF, if you take a look at the underlying index, let's say index is up 1% every day. Okay, so because it's 1% and because we rebalance it on a daily basis, you will compound your return every day. So 1% on day 1 will be realized, okay, and then now you start off your base higher, and you then get another 1% on a daily basis. I will give you the formula later for you to understand. Then the second scenario that I want to share is the best case scenario for an inverse ETF. So of course, the best case would be every day the index drop, right? Then you get to compound your daily return. Okay. Now, how do you calculate this 2 times leverage ETF return? Okay, let's take a look at the formula. So today, let's assume that this particular index that we are tracking goes up 1% every day. Okay, so in order to calculate this return, you need to take today's return, which is 2%, because it's 2 times leverage, right? So the next day, so which means you need to take 1 plus 2%, okay? Because this is your return already, right? For the day, you have realized the 2%. And based on this 102, you then get another 2% return the next day. So you have to take this formula and calculate it in order for you to derive the return of this particular leverage ETF. So in view of time, I can't really go into the details of this, but later on, Benny will share with you where you can download the slides so that you can digest it a little bit. Okay. Now, another example that I will give you is that just now the scenario is when every day it goes up, right? So in actual fact, the index don't go up every day, you know, like a ladder, right? Sometimes it goes up, sometimes it goes up a little, sometimes it goes down, right? So as a result of it, you need to then do your multiplication, macam maths class like that now. So you have to take into account your 4% that you realize because it's 2 times, right? And then multiply by the next day 2%. So you take 1.04 times 1.02. And then the next day, the third day, your index actually dropped 5%. So now you need to multiply it by 0.9. So as a result of this, the 2 times leverage ETF return will be negative 4.5. Okay, but if you look at the index return, the index has actually only gone down by 2.13%. Okay, so then you will say, you know, how come 2.13 times 2 doesn't, you know, translate to the 2 times leverage ETF return? The answer is simple. It's because of the compounding effect. Okay, it's because that we capture the particular ETF return or the index return on a daily basis, and you have to compound it. So the minute you start compounding it over a period of time, your return will not be 2 times. Which is why for leverage and inverse ETF, we have always emphasized on the fact that it tracks it tracks the daily return of the index. Okay. Now, 3 important things to note here for leverage and inverse ETF. First of all, the 2 times leverage ETF return will not be equals to the 2 times index return over time. Okay. Of course, the first what we're trying to highlight here is that even on a daily basis, we try to obtain the 200% exposure, but we may not be able to get the 200% exposure exactly, right? Because say, for example, the KLCI contract is at, let's say, 1,600, right? But the fund size that I have cannot match. No matter how I round up, I can't get 200% exactly. I may end up having just 198% exposure. So when I have 198% exposure, for example, that will mean that if the index goes up by 1%, I won't get 2% exactly. I will get 1.98%. Okay. Now the second thing to note is that cumulatively over a period of time, the 2 times leverage ETF return will not equal to 2 times index return. Okay, this is because of the compounding effect that I just mentioned to you. When you compound it over time, you can't just take the ETF return and expect that it will give you exactly the 2 times of the index return. On the third note, leverage and inverse ETFs are generally not meant for you to buy and hold them. They are actually used for short-term trading. Okay, because of the compounding effect. Of course, if the index is on the one way up, then you can actually hold it as long as you wish to. But if the market is too volatile or the index is too volatile, then the compounding effect may impact your return. Okay, so it's not advisable for you to buy and hold for a long term. Now, risk of LNI ETFs. Of course, first of all, long-term investment holding risk. I mentioned LNI are not meant as a long-term investment product. It is for you to trade short-term. Of course, if you buy into the leverage ETF, you have to take on leverage risk as much as, when the market goes up, you make 2 times, or when the market comes down, you actually lose 2 times. Okay, inverse performance risk, which means that, when you buy into inverse, you expect the index to come down, but if it goes up instead, you are taking that inverse performance risk. Okay, now portfolio turnover risk, because the LNI ETF has to be rebalanced on a daily basis. So the cost that the TER that we talk about, the transaction cost, could come up to be a bit higher as compared to the other plain vanilla ETFs. Futures investment risk. Of course, these ETFs invest into futures contract, so you will be exposed to any risk that is associated with futures trading. Okay, this futures investment risk, I can tell you that the very, very obvious, or rather the significant result of this risk is when the crude oil. Remember, there was one point crude oil actually the futures contract actually dropped to negative, right? And that actually impacted the crude oil ETF, because they buy into the futures contract. So the risk will exist. Okay, it does exist. It's not just simply tracking the spot index. Okay, and of course the last one only applicable to the FANG ETF, which is the trading hours difference risk. Today, if you look at it, the FANG, the NYSE FANG Plus index actually has 10 US technology companies. So it has your FANG stocks, your Facebook, Amazon, Apple, Netflix, Google, and then it has the plus, which is your Tesla, Nvidia, Baba, Baidu, and Twitter. Okay, so all these 10 companies make up the NYSE Fang Plus Index. And we all know that when our market Bursa is open, the Fang Index is closed, right? Because the US market is closed. So as a result of it, there is a trading hour difference risk. Okay. Now, some of you who may be wondering how you can actually qualify to trade LNI ETFs, because LNI ETFs are rather new in the Malaysian market. The first one was listed by Affin Hwang in November last year. So the exchange as well as SC wants to take on a prudent approach in approaching this. So that's why you need to fulfill some criteria before you can trade the LNI ETFs. Okay. So there are 4 criteria that you can meet. Either one will do, okay? So either you declare that you're a sophisticated investor, or you have a margin account with your broker, or you have executed at least 5 transactions in exchange-traded derivatives or structured warrants within the previous 12 months, or the last criteria is you have to utilize a performance simulator, which is on the issuer's website, and undergo an e-learning tutorial that's available on Bursa Marketplace. Okay, so if you're not A, B, C, just go to D. Okay, head on to D, go and learn about this ETF. There are videos for you to watch, and then go to the performance simulator. Later, I can show you how the performance simulator looks like. And once you have done that, you just need to declare to your broker. Okay, so I believe your broker, you have to contact your broker for this to sign a form so that they can allow you to trade the LNI ETFs. Okay, I think that's all I have for the LNI section. Should we take some questions first, Benny, on LNI?
Yep, we do have some questions on LNI. Okay, let me just get back to an earlier question. Let me try to find it first. There's actually a question from our friend Sri Kumar, and I'm not sure whether you know Sri Lichu.
No, I don't know him.
Okay. He's a derivatives guy, futures guy, right? So I know him last time he was in Kenanga. Then he was the acting CEO for Bursa Malaysia Derivatives at one time.
Oh, okay.
And now he's actually at a Saudi exchange. He's a chief derivatives officer at the Saudi exchange. So I'm not sure, Sri, whether you are actually accessing from Saudi Arabia or in Malaysia. You are not in Malaysia. But yes, thank you for joining us tonight, right? So Sri is basically trying to compare also what's the difference between the futures market and the inverse ETF. So one of the questions is asking is, I'm not sure whether you can actually answer this, but he's asking, okay, would you suggest me to short the market futures or inverse ETF or buy the inverse ETF?
Okay. I would say this. My answer is it depends on how much time you have to manage your exposure. Okay. Like it or not, futures are for sophisticated investors, for people who understand, right? If you totally understand the risk that comes with it, the way it works and all, and you have the time to monitor, I would say shorting the futures directly will be more beneficial to you. But as an investor who may not have the time, especially to monitor the market and monitor your trades, then investing into the inverse ETF may be a good way to start. So very simple. If you ask me, if you know exactly how it works, even people like you, Benny, right? You wouldn't buy a leverage and inverse ETF because you can go into the futures market directly to short and to long, right? You don't need the leverage and inverse ETF. But for a beginner who may want to try and understand how the leverage and inverse part works, then you can actually consider the leverage and inverse ETF.
Yeah, I think one of the things is because not exactly true, Lichu. I think I still do have to look at inverse ETF because, like you said, if I don't really have time to monitor it myself, then the inverse ETF is a much easier way to do it because you got fund managers doing it for you, right? And of course, I mean, you have to understand the futures products as well. It's totally different with ETFs. You have to understand the leverage that the futures market is offering, because if you are investing, for example, right now. if the margin is 4,000 ringgit and you're trading one futures contract, it gives you a 20 times leverage. All right. So compared to this is you don't have any leverage, and you can start with minimal amount, right? In futures market, you do have to put a margin of, let's say, 4,000 ringgit to start a trading account, but you can start inverse ETF or even leverage ETF with 1,000 ringgit or even lesser, right? So it really depends on you, lah, right? And what's your risk appetite and what's your objective as well, right? But of course, you want to do intraday trading, probably the futures market will be better, lah. If you do it intraday, right? And you want to find volatility and so on and so forth. Yeah, so that I think for me, the inverse ETF provide that convenience for investors who want to also have, let's say, like the market has been falling in the past few days, last week, which Lisu just mentioned, and sometimes we may get panic and do not know what to do. And one of the ways to actually just buy inverse ETF, so that will actually hedge against the falling markets, right? So the reason why we are actually having this discussion as well is because you should also look at other alternative to protect even, let's say, your investments that you already have, right? Especially when it comes to inverse ETF. So I like it when Choo started the presentation, going short, because short is like a taboo, right? You can't short because it's illegal. Of course, it's naked short, it's illegal. But right now you actually have an option, right? And this option allows you to do many different strategies in your portfolio or investment portfolio, right? So do understand them further. Choo is going to share with you how you can get more information on ETFs and also their products later on. All right. Okay, there's a question from CH Ang again. He basically asked, what is considered a good size fund by any ETF?
There isn't really a standard, if you ask me, but from a unit trust perspective, anything that is typically 30 million and above, will consider it a good size. Because today, if the reason why we are concerned about the fund size, right, is mostly because you are worried that the expenses of the fund, because of the small fund size, you as an investor end up having to pay more, right? Because we know that the expenses are all shared equally by investors. So the main reason, I guess, for an investor to be concerned about the fund size is really the TER. Okay. I'll give you an example. So, for example, Affin Hwang, a lot of our ETFs, we choose to absorb some of these costs that expenses of these funds. Like, for example, the index costs, the index license that we have to pay. Ideally, the fund is the one that is supposed to be paying for these fees. But as a responsible issuer on our side, because we want to grow the ETF and make it scalable, we have decided to absorb those costs as our business costs. So as a result of that, what we're trying to do is we're trying to control the TER of the fund to make sure that it doesn't exceed a certain percentage. So once the fund size reaches a sizable amount, maybe like 50 million or 100 million, then we will start charging all this cost back to the fund. And by then, the impact to every investor will be a lot lesser. So again, there isn't really a good number. What I would say is more important is look for a good fund manager or a fund house. Yeah.
Okay. Now there's a question from Anthony Lau. It's asking whether LNI or leverage and inverse ETF provide dividends. Can keep long-term investment or not, or we only make profit or loss during sell-off?
Okay. LNI ETFs, because they invest into the futures market, so there isn't any dividend that you will receive. Because let me give you an example. Let's say the FANG ETF, leverage and inverse ETF that we have, even though Facebook, Amazon, and Tesla may distribute dividend, but the fact that we are not investing into the companies or the shares directly, because we're investing into the futures contract, we don't get any dividend. So if the fund doesn't get any dividend, we will not distribute any dividend to investors. So leverage and inverse ETF are purely to be used not as a dividend shares, but it's more for you to capture growth and also the inverse performance in the event there's a sell-off in the market, of course. As to whether it can be kept for long term, it really depends on your view of the market. Okay, let me give you an example. Yeah, say the FANG 2 times leverage ETF. If you take a look at the bottom, which is in March, right, end of March, and if you were to buy the ETF, this leverage ETF at that point in time, we know that, you know, Nasdaq has already surpassed its previous high and is at its all-time high, right? Which means that today is already August. You would have kept it for 5 months, okay, and let it run, because the market is trending upwards. So as a result of it, you can actually hold it long term, okay? But if the markets are very, very volatile, it swings up and it comes down very sharply, swings up, comes down very sharply, then holding the leverage and invest ETF on a long-term basis will not be beneficial to you. Okay, all this can be illustrated in the performance simulator. Maybe later on, once I'm done with the last section, I can show you how you can use the performance simulator as a gauge of the performance of the ETF, so that you can understand the behavior of the ETF better, and whether you think these ETFs are suited for you to hold longer term. Just to give you a flavor, this particular ETF, the FANG ETF, from the bottom, if you would have bought it, if you were that bold to buy it at the bottom in early April, you would have doubled your money already by now.
Yeah,
okay,
more than double.
I think more than double.
Yeah, I remember you launched it in November itself, and the price was 4 ringgit, right?
Correct.
Even if you hold since November until today, it's almost double as well, because
Yeah.
I think the last done price on Friday was 744, right?
Yeah.
So yeah, even that, I think it's so. But if you bought at the bottom in March, it's more than double.
Yeah, because I think the lowest it has dropped was about $3 or 2 plus. That was the lowest, 2 plus.
Yeah. Yeah, 266 on my charts lah. So because I'm looking at the charts right now.
Yeah,
Yeah,
so
so it's
only
almost
you.
3 times.
Yeah, actually you're right, almost 3 times.
Yeah. Yeah. Okay, so Sri Kumar is actually accessing from Riyadh. So
Wow.
from Riyadh. Thank you so much, Sri, for joining us. All right. Maybe one more question before we continue your momentum one, right?
And
Okay. Junior One is saying that ETF is the best investment in the world. Okay, that's not a question, that's a statement. But you know what? But you know, Junior, can you tell us why? You just type it down. Why do you think that ETF is the best investment? So now the question from Junior is actually this: do Benny and Mei Choo, not is Lee Choo, not Mei Choo, invested in ETF?
you want to
Maybe
answer this, Penny?
Well, I do, because, and of course in Malaysian stocks I have built our own portfolio and so on, right? But if I want to get an exposure in, let's say, the US markets or even China markets, I will just put them into the portfolio as well. So at least, I don't have time to spend looking at the FANG stocks that Lichu has mentioned, because it's an index, right? So if I want to be involved in the technology sector, and I know that the technology sector is the current mover in the US market, right? So yeah, just and it's now, of course, it's 7 ringgit and 66 cents. All you need is 766 ringgit minimum to actually get an exposure in the US market, right? So you can actually have the exposure in the US. And of course, China has also been attractive because, as you know, as a trader like myself, I also track other markets, right? And China has been one of the best performing markets ever since this year itself, right? So yeah, I do, but mostly on foreign market ETFs lah, right? To get an exposure. That's me lah.
Yep. For me, I have invested in all our ETFs, except with the exception of the leverage and inverse ETFs, because they are short-term investments, and then there are some restriction on the company's end for us to invest into LNI. So other than LNI, I hold all of our Affin Hwang's ETF. So basically, every time we launch a new fund, I personally put my own money in there, because I'm a big believer of ETFs. Those of you who have followed me in many presentations, I'm probably one of the most passionate person in Malaysia when it comes to ETFs. So yeah, I personally like to invest into ETFs because I don't really have the time to monitor the share market. I don't invest into the share market directly. I use ETFs as a way to gain exposure to the share market.
All right. Okay, maybe one last question before we go on. There's a question actually from, let me see. Okay, a simpler one. This is from Anthony Lau. There's no expiry for ETC, for LNI ETF, right? Unlike Warren, which is expiry.
Yeah.
there's no expiry.
So I guess one of the good thing about the leverage and inverse ETF is there's no expiry, so you don't need to worry that one day you look at it and it's expired, worthless. So that's one of the good thing about this as compared to warrants. But of course, it doesn't give you exciting leverage ratio like warrants.
Okay, maybe there are still a few questions, but maybe you want to go on first, and then when you end, at least we have time, whatever time left, then we can answer those questions. So hold on to your questions, and if you have any questions, do type it down. All right, so Lichu, maybe you can continue with the last.
Okay, so the last one that I want to talk about is the momentum strategy as a diversifier. So why I say that is because I know that many investors here who have are fans of equities trackers are likely to be value investors. So most likely you probably won't be buying into momentum stocks. But what I'm trying to explain here or share with you here is that momentum strategy actually is a strategy that you could consider, but because the fact that you want to focus on value investing, therefore the momentum strategy should be just a small fraction of your entire portfolio. So if you take a look at the MSCI World performance of the various factors, and if we compare momentum with equal weighted, with quality, minimum vol, dividend, high dividend yield, and value weighted, you will notice that over a long-term period, although the momentum strategy has got a higher volatility, but it gives you a strong relative return. So, a very, very long-term performance, the momentum strategy clearly outperforms. Now, for this particular strategy, it's unique because Affin Hwang actually partners with Dorsey Wright. This Dorsey Wright is actually a company owned by NASDAQ. So if you know the triple Q, NASDAQ as an index company, they are the ones that is providing this momentum index to Affin Hwang. Okay, so this index is called Dorsey Wright Technical Leaders Malaysia Index. And if we take a look at the historical backtested return of this particular index versus the MSCI Malaysia Index, the MSCI Malaysia Index is more or less equal to the FBM KLCI Index. You will see that since 2005, it is more or less flattish, right? But the DWA, the Dorsey Wright Technical Leaders Index, has actually deliver very, very strong historical performance. So if we take a look at the 15 years performance of this particular index, it's very interesting because out of this 15 years, there is only 1 year where it underperformed the MSCI Malaysia Index, and there are only 2 years where the returns are negative, which is in 2008 and 2018. The reason for the 2018 underperformance is because of the result of our general election. Because there was a change in government, we know that some of the government-linked counters were badly hit right after the election result because it was not priced in and was not expected. So that year, it was a very, very difficult year for this particular strategy to perform. So I'm not saying that this particular strategy is the best and it will always outperform, but this particular index will thrive in a scenario where there is very, very strong discrepancy between the laggards and the performance. So environment like now, where tech and the healthcare seems to be very, very strong versus some of the consumer names, etc. These are possible environment where it could do, the strategy could do well. So this particular strategy is not new because there is a particular ETF in the US called the Invesco DWA Momentum ETF. They also track the NASDAQ momentum strategy. But of course, the universe or the underlying are US stocks. Okay, whereas for us, the NASDAQ Malaysia leaders is actually covering only momentum stocks, but Malaysian companies. Okay, so that's the main difference. And if you take a look at this particular ETF, and if I stack it with the SPDR, which is your S&P 500 ETF, it clearly outperforms over the long term. So this one, or rather this return, actually validates the first slide that I mentioned in this section, whereby over a long term, the momentum strategy actually delivers strong outperformance versus the normal index. So very quickly, just to explain to you why you should be considering the Malaysia Momentum ETF. Today, of course, if you are already a momentum investor and you are already trading stocks with momentum, then by all means go ahead, because you probably could be doing a better job, right? So this particular ETF is not suited for you if you really want the really high volatility stuff. The volatility is higher, but because of the quarterly rebalancing, it may not be picking stocks with high momentum as at now. Okay, so it will suit investors who, for example, are value investors, are dividend investors, but they want to consider a momentum strategy but don't know how. Okay, so some of you, want to try momentum, but you don't know where to get, or you don't know what stocks to buy, or maybe it'd be too risky for you to take on that risk to buy into momentum stocks. Then this particular ETF will make sense to you. Okay, so in this strategy, we will equal weight 20 companies, which NASDAQ has filtered out and screened through, and using the point and figure charting. So this is the technical analysis that they use, and based on the point and figure charting, they will pick out 20 companies with high momentum. And because this is not done on a daily basis, it is done on a quarterly basis. So every March, June, September, and December, there'll be a rebalancing of this particular index. So it will only be looked at end of these quarters. Okay, so which means that in the event, if some of these stocks has lost its momentum in the middle of the particular between the rebalancing period, there will be nothing. There's nothing. The fund manager will do. There's nothing that the index will do. We will continue to hold on this particular company until the end of the quarter, and we will look at it again. So if you take a look at the point and figure charting, what essentially we're trying to do is, we're not trying to pick stocks which has momentum for a short term. Okay, so because we look at stocks, since they list, there is a strong track record, so it has to have that long-term momentum before it gets included. Okay, so of course those small caps and all are all filtered out, right? So these are solid, mid-large cap companies which has high momentum. Okay, if you'd like to know what is in this particular momentum ETF, again, you can head on to our website, tradeplus.com.my, to see the list of 20 stocks that are currently in this portfolio. Okay, and on a quarterly basis, every quarter, we will announce and rebalance this particular ETF. So it is a diversified basket. So like I always like to say, why you want to invest in ETF is really because you need to consider how much risk you're willing to take and how much are you willing to allocate into this particular strategy. So again, back to the same question just now, if you have 100,000 investable assets and you just want maybe 5% or 10% into a momentum strategy, then 10,000 is not going to get you a lot of shares with high momentum. If you buy just a few shares, you may end up having a very, very high risk. But this one, by buying into one particular ETF, you immediately get exposure to all 20 companies. Okay, So the last section, I will talk about how to use ETFs in your portfolio. Basically, to me, there are just two strategies that you, of course, there could be more, but largely just two strategies that you can consider. First of all, if you don't have time to monitor the market, you want to invest for the long term, you have low to medium risk and wants diversification, which means that you are like me, no time to look at the market at, from 9 to 5 because you'll be in meetings, you'll be, working and all. Then buying a basket of ETFs plus unit trust funds will make sense for you. So how can you do it? First of all, decide what asset allocation you want between the various asset classes and strategies. Look at your take a look at your own risk appetite. How much can you allocate to equities, to shares? How much can you allocate to bonds? How much can you allocate to REITs, etc. Okay. Then secondly, if you want to invest, say in China, then you compare, should you buy ETFs or should you buy unit trust fund, okay, of a similar strategy, and take into consideration also the investment amount and the charges that you will need to pay as a result of investing into these two options. And then third of all, select the investment product that suits you the best, okay, and your needs. And then last, invest regularly and rebalance it at least once a year. Okay, so people like myself, I'm more of a passive investor. So I invest regularly and I look at it maybe, the asset allocation and rebalancing maybe on a half yearly or quarterly basis. I don't look at it, all the time. So if you have that kind of, profile, then, go ahead and adopt this strategy. The second strategy is you could potentially DIY your Malaysian stocks and then use ETF for foreign exposure. So like I said, those of you who have been investing into the stock market directly, go ahead, by all means, continue to do it if you have the time and the expertise. And of course, if you want those short-term trading and all, then you can do it yourself. But don't just look at the Malaysian market. Do consider what sort of foreign markets that can gives you the exposure, because like I show you, right, the MSCI Malaysia index and the FBM PLCI index is not the most exciting index except for the recent past 6 months. Otherwise it can be quite flattish, it can be quite boring. So what you can do is you should also consider foreign exposure, and you can manage those foreign exposures a bit more passively, because all you have is the time in Malaysia, and just invest into stocks directly, combine it with ETFs to get exposure to foreign markets. Okay, so let me just sum up with the slides that I have here. So Trade Plus is actually by Affin Hwang Asset Management, and we currently have how many ETFs already? 2, 4, 6, 8 ETFs already on Bursa Malaysia. I think in total Bursa has got about 19 ETFs. So in terms of number of ETFs, we are by far the largest number of issuers, number of ETFs in terms of number of issuances. We will continue to come up with more interesting ETFs, but these are what we currently have. And if you want to get in touch with us, I actually am starting a weekly webinar next Tuesday, where I will go into the ETF market. So if you're interested, head on to our Facebook and you can register for it. We also have a hotline for you to WhatsApp us or even call us as well. You can reach out to our ETF specialist who can assist you in any questions relating to ETFs. Okay. Okay, Benny, shall we take on more questions and sum up?
Yeah, sure. So you know what, I'll just also share with you in a short while where you can actually download the slides. So DQ has actually agreed to for you guys to download the slides. I'll show you the link in a short while. All right. So we'll take the questions first. We'll try to look at a few questions before we end this. All right, with the link to download these slides today. All right. There's a question actually from MK Gill Choo that asks which ETF will be suitable for dividend investors. The REIT or ETF, what is expected dividend return for the fund?
Based on the current yield of the index for the REITs ETF, it is around 4 to 6%. That's the current yield lah. So I would say that you should be expecting about, I think, somewhere between 3 to 6% in terms of dividend yield for the REITs ETF. But because we just listed it, we will only start paying on the first after the first financial year end of the ETF. So don't expect any dividend in the near future. But of course, we will monitor the dividends that we receive, because we don't want to start paying, really small size. That doesn't make sense. So what we'll do is we'll try and accumulate. But don't worry, some of you may think that, hey, if I don't receive the dividend, then, am I losing out? As and when the dividends are being paid to the ETF, they will be incorporated into the NAV. So the cash holding will increase, and as a result of that, the NAV of the ETF or the price of the ETF will go up accordingly. So in the event if you redeem or if you sell your units, then you would have taken into the price would have taken into account the dividends that we receive. Other than that, I think you can also look at the my ETF MSCI, I think Malaysia dividend ETF. I think that one also focuses on dividend paying companies. So you can also take a look at that one.
Yeah, so not all ETFs actually have this income distribution or dividends, right? So I'm just going to provide a link on Bursa Malaysia where you can find all these ETFs, and you can actually go into their, the issuers themselves and all the ETFs available. You can look at the performances, right? And of course, they also do have annual reports and see, what kind of dividends that they provide and so on. So you have to dig deeper a little bit more into, looking at all these ETFs and see what kind of ETFs they're offering. So I'm just going to put that link in Bursa Malaysia. If you can find it yourself in Bursa Malaysia, that's fine, but I'm just going to provide it so that it's easier for you to find. All right, so a few more questions, Lee Choo. There's one question here from Lee Zifui asking, under what scenario an ETF can be delisted?
There isn't really a scenario, I would say. It really depends on the issuer. So today, let's say, for example, right, if the theme of this particular ETF no longer makes sense, right? I believe, like, for example, say, for example, let me give you an example. Let's say we have a consumer, okay, maybe not consumer, maybe say technology, okay, technology sector as ETF, right? Maybe 5 years down, maybe 20 years down the road, 30 years down the road, let's assume tech is no longer a theme that is in trend. What will happen is that we will see demand for the ETF reduce. So as a result of that, the ETF issuer will then weigh and see that does it still make sense to maintain or to offer these ETFs, because there will no longer be demand, right? So when that happens, in the event the ETF issuer decided that they want to delist the fund, they can't just delist it, right? Because under the SEC guidelines, the fund manager or the issuer has to go through certain steps, right? Including calling for a unit holders meeting. So if you are a shareholder or a unit holder for the ETF, you will have to come in to vote. Okay, if you disagree to the delisting, then if the fund manager cannot achieve a certain quorum or number of votes, then we can't proceed with the delisting. So again, it really depends. There isn't really a scenario lah. But most likely it could be driven by the fund size of the fund, too small, and secondly could be the theme of the particular ETF when it's no longer in favor.
All right, few more, just maybe 2 or 3 more questions. We still have a bit more time for this. Anthony is asking, just wondering, during the great economy or depression time and when KLCI or foreign index is very low, is it the best time to invest in leverage ETF?
Of course. If you have the guts and if you know the bottom, right? Because to be very honest with you, the March bottom was not the bottom that many people expected. Personally, I thought it would correct even further. but who knows, it went on a V-shaped rebound, right? So I think a lot of investors, the issue here is, how to fish the bottom, right? Of course, fishing at the bottom is the best. But you need to make sure that you have your own strategy lah. Like, for example, okay, assuming you thought that March was the bottom, you don't put in everything. Maybe you just put in 50%. And in the event that it materializes and it goes down even further, then you buy some more, right? You buy the leverage even more, buy more when it drops further. Then you enjoy the ride when it goes back up lah. Of course, buying any investments at the bottom of the market will be the best strategy.
Yeah, if you know where the bottom is, lah, right? But you know what? I think because you also have, remember, we also have inverse ETF, right? So you actually make use of these two products to hedge one another. Like, for example, if let's say you are not certain where the market is going to go and you're buying at the bottom, you can actually buy, let's say, one leverage ETF, and you can actually buy two inverse ETF. So no matter where the market goes, you will not make any profits, right? But once you're confident enough of the market direction, then you can just sell one of it and just flow with the direction. I mean, so that's why I mentioned, we should be actually looking at these alternatives where you're able to manage even your risk in your investments, right? By you looking at these products itself. Yeah. Okay. So yeah, bottom. Yeah. I mean, if you can catch it, then that's wonderful, lah.
Yeah. I wish I caught the FANG bottom.
Yeah. All right. So we have two more questions. I'm just going to go for two more questions. We have one from CH Hwang because he's asking about the momentum one, right? So what happens to momentum ETF if the market is in a downtrend? It will likely not perform. Actually, split the questions in a few. Provided that, of course, everything remains equal. So what happens, if the market falls in a downtrend? Does the momentum ETF still be able to perform?
It likely will fall as well. Of course, it's not a foolproof or bulletproof strategy, right? Which is why, the momentum strategy comes with potentially high return, but bear in mind the volatility is going to be high, which means that in the event downtrend, it will get hurt, right? The portfolio will just go down. But what will happen is if the stock does have that longer term momentum, it would pick up faster as well, I would say. So yeah, so it will definitely go down the drain as well if the strategy goes if the entire market is on a downtrend.
Yeah, that can't be helped lah if the market is all in a downtrend.
Yeah.
Okay, one more last question before I give you the link to download today's slides. All right, there's one more for Lee Choo. We have a question from MK Gill. This is a very simple one. Trade Plus China ETF, I noticed, can invest in Malaysia ringgit or in US denominated currency. Answer is yes, right?
Yeah. So it's just different in the counter. One is EA. The stock code is the same, 0829. So one is EA, one is EB. So up to you lah. If you have US dollar, then you can buy the US dollar counter.
Right. Okay.
Sorry, Penny. Maybe just for the momentum one, just to add on, right? Maybe I can give you an example of how the ETF has, or rather the index has actually done. So, say for example, we know March was the downturn, right? In January, in the December rebalancing, the index actually had Air Asia. It had quite a number of companies in there, and it just went down, right? Because all this corrected, during the sharp fall. But when it comes to end of March, when the index Nasdaq actually rebalances the strategy, it has actually picked up all the five glove counters.
Glove counters, yeah.
So it picked up all the glove counters because at that point in time, glove were the ones that has high momentum. And then it also picked up REITs. So there were a couple of REITs in there because when it falls, right, when we talk about momentum, it's not just about the rate it goes up, it's also the rate that it falls, right? So if it falls less than the KLCI, then it shows that it has a higher momentum as compared to the KLCI. So REITs got included, healthcare got included, gloves in specific. So as a result of that, it had a good ride. The index had a good ride, but unfortunately we didn't launch in time. If we had, then the performance would have been superb.
Yeah, and you mentioned the portfolio is adjusted every quarter, right? That means 4 times a year. Okay.
Yeah.
All right, awesome. So guys, I'm just going to share you the link in a short while where to download the slides. If you need to learn more about investing, please do access Bursa Academy at .bursamarketplace.com. This is where, Bursa Academy is actually a one-stop e-learning platform by Bursa Malaysia to provide investors with continuous and holistic learning journey for investments. All right, so please do pay them a visit and register at bursamarketplace.com. Right now, here is the link to download today's slides. You have to complete the evaluation form. Once you have immediately completed the short evaluation form, then you will receive an email to get those slides. All right, so it is at bit.ly/Bursa Slides 2008-15. It's basically 200815. We're going to put that link in our comment section right now, and then so that you can actually click the link and start the evaluation form and get the slides. All right, so that basically ends today's webinar. Right, thank you so much guys for joining, and thank you very much Choo to spend more than 1.5 hours with us explaining about ETF. She is definitely a champion for ETF at the moment. You can see any webinar that is about ETF, you'll see Choo there. So she's a very hardworking person to promote ETF, and hopefully that, if you are listening to it, you should really consider looking at ETFs as one of your investment or include them into your investment strategy or portfolio as well. All right.
Yep. I can keep my job too.
Yeah, so thank you very much, Choo. All the best to you in your continuous front running and pushing for ETFs. And guys, thank you so much also for joining us tonight. And you know what? Have a good evening, and we'll see you again in the next webinar. All right. So good night, everybody.
Thank you. Good night.
Thanks once again.